Hello, everyone. How we doing tonight? Listen, for us, I wish I could. I'm doing great, doing great. My voice might be a little weird. I took a nap today, guys. Okay? So, a weird one for me. I'm a little bit destabilized, but yeah, that's all I can say. Glad you guys are doing well. Can I get a quick confirmation that you guys can see my screen? Awesome. We had a weird day. I don't know how you guys thought about it, okay? But trading my model, I saw a lot of back and forth, and with my understanding of the markets, I could frame both directions. So days like these are extremely hard for me because I have to make a choice. And usually what you want in trading, at least what I want in trading, is that I don't make choices. I have a set of rules, I follow those rules, and then I can just trade. But that's in a dream world. There will always be a time where you need to make a choice, you need to filter in some sort of way, right? When you have a bias, you have a filter. Today, I was looking for lower due to my higher time frame charts, right? If we look on the daily, what do you see? There's one thing. Monday formed this inefficiency and induced those equal lows. Well, created those equal lows, right? Induced this liquidity. So what does this tell me? Well, I want us to get into that fair value gap, rebalance this, and then expand aggressively lower. But now CPI is tomorrow. So I expect us to leave that move for CPI. So with my understanding of narrative, I thought, well, how about we go up today and then CPI can bring us lower? But then we decided to go down today and up. So we just had both ideas, right? You just had to be lucky on your timing. At least that's what happens on days like these for me. It's I am willing to go both long and shorts. I have my specific levels and I want to have my timing be on point. And sometimes I don't, sometimes I am. That's why you have a maximum amount of trades per day that you're looking for. We'll dive down into the lower time frame. I had a lot of people, a lot of students today that just traded the short full on. Very happy with you guys. That is what I wish I could have done this morning, but I guess I was trying to overreach and be like, oh, well, what about if it goes up today and then tomorrow we can start going down? That's what I was looking for with CPI. And especially the day before CPI, I don't expect much other than ranging, but we still are going to have some objectives to that range, right? If we go down to the 15-minute and look specifically at our news release, right, at 8:30, what do we see, right? It is this candle right here. Let me actually remove some things. Let's remove the vertical line that we have at 9:30, and let's go in replay mode so that we don't see today's PA, just so we can have our vertical line for the day start. I'm trying some new settings with the liquidity depth by 2 degrees. Not liking them yet, but might see a new indicator coming to my chart very soon. This is our daily fair value gap, so I will mark it out, right? This is the daily fair value gap that we formed yesterday. So from this daily fair value gap, I'm looking at short, right? That's my understanding. That's my bias. We talked about it at length during the weekly outlook if you want to go there. So at the news, what am I actually looking for? I'm looking for a Judah swing confirmed with SMT. And that's exactly what we had. Truth is, you had a beautiful, beautiful framework to go short. You had your bearish bias, you had your bearish array, and you had your Judah swing at the right time, confirmed with your SMT. Moreover, that SMT isn't just anywhere, right? If we remember the London kill zone, London range, however you want to call it, okay? London session is from 2 to 5 a.m. So I'm looking at those highs and lows, which in this case are right here and on the highs when we have SMT. So we formed SMT at a key level, at a key time, confirmed once again by SMT, your manipulation, and your bias is clear. So truly, that's just a textbook short. Now, what makes it less pretty is once we go down to our lower time frames and all our higher time frames, we can see why the hell are we trading all the way up on that wick creating relative equal highs, right? Inducing the liquidity that is present here at those data highs and then going lower. That's what messed me up this morning. I didn't expect us to go back all the way up here. We can, but we rarely do. So especially if we go down to a 1 minute chart and we go have a look at this. Now, I will remove this daily fair value gap, but do remember the only reason I'm looking for shorts here is because we are within my higher time frame point of interest. From this news at 8:30, very huge move higher. And as you can see, all we did the whole time was just induce these data highs. Let me mark it out as such. And by the way, for those unfamiliar, I believe it was Brian who was asking, but data highs, data lows, all we're saying here is news highs and low, right? So the resulting move from the news created this high. I wouldn't call this low data low. I would call this low data low. And this is a range that is formed by the news, and we call it data. I believe I heard that from Kit for DRICT, and I've just been calling it that since. It is important to separate them because they are different liquidity, more important in some ways than any random swing point. But once again, going at this point, right, what did you have at 9:30? Well, if I'm looking to short, I'm looking for Judah swing higher. So perfect scenario, right at 9:30, we'd go and sweep these data highs, and I would have been full board short. I would have shorted this turtle soup right away. But we did not, right? We just kept inducing these highs. And yes, these highs were being induced with SMT. So at that point, can you trust that this level will not need to be revisited due to the fact that there is SMT at the highs now, right? And there was also previously SMT at the 8:30. Yes, but we kept diving towards it. And at that 9:30, and once again at that 10 a.m., we kept diving towards it. So it made it a little bit of a harder thing to follow just in general, right? But we'll look at it. The truth is, I always say when there is SMT on both sides of the range, right? That is not where I'm looking to put it, right there. When there's SMT on both sides of the range, this is not a high probability time to be trading. Now, I always say you have to wait for a raid. Now, this move higher did not take out any liquidity specifically, right? It took out some, sure, but that is my raid. Why is this my raid? Well, very simple, right? We had a very aggressive move higher, and the goal of that move was not to go rebalance your range. If not, we would have stopped right here, right? Always first premium and efficiency. So the reason for us to go all the way up here was to take out the people that were short here, which in turn gives me the definition of a raid. So from a mechanical standpoint, it was a little bit of a harder day. But truth is, you see SMT on both sides, you just wait. Wait until when? Well, 10:30, the end of the opening range, sure. Truth is, you have that 9:50 to 10:10 that we'll talk in a second here. Personally, as I said, I was looking for us to go take out these highs first. So I did take some longs. Now, I'm not going to talk about those longs specifically. We're going to see it just in a second because it is not necessarily, well, it's not a bad setup. It's just, it's not in line with higher time frame bias, right? Your higher time frame bias was clearly short, at least with my understanding, my logic, the logic I teach as well. You were clearly short today. Now, I was being confident, overconfident, and using my experience to say, well, with the news events that we have this week, I'd like to see today go higher before ranging so that we could leave the lows open for tomorrow. But that's not what happened. So I did take some longs. You might have seen from my Twitter. I got stopped out on a unicorn right here on this inverse fair value gap using this breaker. I had my 3PD over stop loss rule right there. Was looking for a big expansion towards average daily range levels that were all the way up here. I had 2.4 something R. Got stopped out pretty quickly. I took another bite at that long at that 10 a.m., right? Right here. Why did I attack this? Because I thought that the 10 a.m. open high could at least provide me with a setup. And the truth is, after trading all the way close to these data lows now, and let's actually do it right. Let's bring a drawing in here. And let's put that red just so it is easier to see, and data lows. So after we come trade these close to data lows, of course, my bias got switched. So right here, I look for lows. Why? Because we induce these, we're not taking out the highs, we're forming SMT. But I saw this setup to go long, and let me just mark it out right here. You have this breaker block. I entered on this right here. So this was not a fair value gap. This was not nothing. This was just us sweeping. And I was on the lower time frame looking for a fair value gap. Now, this is a very specific setup, very advanced setup, and it is a scalp. How can you do perfectly a vertical line? Oh, that is by holding shift. So whenever you're drawing a line, for example, if you just, well, first of all, if you hold control, it's going to snap to places. So I just hold control and you'll see this little magnet pop up so that I can put it specifically on a swing point or on the open, close. You can use the bodies of the candles or the high and low. And then you can use shift. So your shift button to do perfect angles. So you have 45 degrees, all of this, you can do perfect angles, and then you can just hold it out. Pleasure freeze. This is not a setup that I anticipate people will be trading, right? It is just a hyper scalp. So I see the formation of this breaker. I have my understanding that the 10 a.m. candle will open high. And so I will just take this trade and trail aggressively. So for me, my setup looked a little like this. I entered pretty much on the open, of this candle. I had a quite large stop loss, honestly, here. I was looking at the low of this IFVG. That was my invalidation point. Let me just mark it out. And then I was looking, of course, I was wishing that we could go to the data highs, but you'll see from what I posted on Twitter with my executions that I had some mechanical take profits nonetheless, right? So let me just remove this earlier loss. I looked at my premium and discount, 5-minute range. What do I see? Well, my first premium and efficiency is this order block. So no matter what, even though it was smaller risk to reward, I was looking to take profit there. I had 5 contracts. I took out only 1 at this level, and you'll see why in a second here. It's because my R was below 2. I don't like to take profit before 2R, so I prefer to take 1 here, and then I took another one here, and another one when we took out this high right here, which led to 1 contract, because I did take out another one on the way down, being stop break even. So for me, that was a loss followed by a small win. But the truth is, at this point in time, as I just said, I just forgot that I should have been prioritizing short. So I just held on my long because I was in a long. But there was a beautiful short setup, which we'll look at in a second, right? We traded into this order block where we formed a pattern, right? Look at, as soon as we trade into it, we had a very aggressive candle down. If you guys were watching it live, this happened in half a second, whatever. And then we formed a breaker block from this, right? And I've had someone on DM me, and if that's you, well, here it is, asking more specifically about breaker blocks, right? And it's something that I go over quite often, but I never take note of which videos it is, so I can't direct people to it. So I'm going to bring in something very quickly. Oh, image is too large. Okay, well, no image. What I'm looking for a breaker block is always the same thing, right? I'm looking for a range, and let's say in the case of a bearish breaker, it's going to be a bearish range. I'm looking for us to take out one side of that range to then go take out the other. In the other direction, if I'm looking for a bullish breaker, it's going to be a bullish range. Go take out one side, then go to the other. It is a pure pattern that you can basically replicate anywhere. There's no discretion to it. Where I just added some orange dots, these are swing points. Swing points, 3-bar patterns. You have a high, the candle to the left, the high of the candle to the left is lower, the high of the candle to the right is lower. This candle in the middle is a swing high. For the lows, candle to the right is higher, candle to the left is higher. This is a swing low. I'm looking for a swing point to a swing point for us to take out one side of that range and then go take out the other. So I did want to just revisit that very quickly for the people who were wondering. And if you see it right here, you'll see swing high, swing low, take out the high to go take out the lows. And right at that point in time, if you see it, I do have to zoom in a little bit. When did we form the breaker? On this candle, which means what? Well, right here, this fair value gap, tiny as it is your perfect unicorn entry. So I'm quite sad I missed that first entry. We'll talk about the rest in a second, but this is your textbook entry. Now, what would be a reason for waiting here? There are none, right? Why? Because you have SMT before, right? And you kept doing SMT along the way. So even though there is no SMT right at those highs, until we'll look at more in a second, I would still be looking to take that entry right here. Now, if you waited for SMT, once again, we'll look at previously, but I didn't want to tell you guys that I was waiting for SMT. That's why I didn't take it. No, I actually just missed it because I was long. So I wasn't focusing on, oh, okay, can I flip my trade? That's not something I like to do. So I just missed it. And truth is, I should have never been long. I was trying to scalp to get back that win, which was not a bad trade, but I missed a better trade because of it, right? And see, just to those data lows, we're seeing 4.34R, beautiful setup. This would be my target. We had, if we just go back and zoom out, we have our relative equal lows from our higher time frame understanding, right? And you have a lot of targets like this consolidation that you could be targeting, or from our breaker block, you can see we can have standard deviations. Let me actually zoom back in here. These are tough. The ones that are one candle, and I'm trying to draw the standard deviations on them, they're a pain. You could look at 4 standard deviations right here, right? And see, we had a beautiful run to these data lows. You'd have a low-hanging fruit objective just at this low. Why at this low? Well, very simple. Premium and discount, once again, and then you look at what? Oh, let me just draw this correctly. You go to your 5-minute chart. What are you looking for? Well, right now I'm going short, so I'm looking for my first discount inefficiency. In this case, my first discount inefficiency is this order block. And you'll see, just in a second here, that the liquidity I marked out is right above that order block. So sweeping this liquidity into this order block, that is your partial objective. And see, very nice partial 2.34R. I would have looked to take profit at data lows. Had a bit of a retracement scare here after taking out this liquidity at 10 a.m. But then it ran all the way down to your first standard deviations. Could have held a runner. I know myself, my runner got stopped somewhere here. Actually, I know exactly where, right here. So my runner got stopped here. So I gave back a lot of handles, definitely. So I gave back 130 handles. And that's something I was going to work on. I had my stop here initially, and I did trail my stop to these highs when we went down, but I just moved my stop back higher. So this is something you should never do, by the way. You're always going to be happy if you make enough, but you're not going to be happy if you basically gave away. I didn't say that in the best way, but basically, psychologically speaking, for myself, I'm always happier if I close the trade fully at a certain point because I made money, compared to, oh, I tried to leave it on for longer, gave myself the opportunity for more when it was already enough, but then I gave away too much, which is what happened today. I gave away back quite a bit, right? And if you look at the return from that position, you'd be 4.94R, and then at this point, you'd be almost double, pretty much. And giving away back all that part, that's definitely too much. So even now, after a year and a half full time, I still make a lot of mistakes. A win is a win. It's just the nature of the market. Can't get every penny. Exactly. Tell me that on my deathbed after I've tried all my life to get the most amount of money possible. But I was talking about this setup specifically. And for me, as long as that partial has not been met, so just to give it its correct name, as long as that retracement objective has not been met, right? My first discount and efficiency in this case is my retracement objective. Well, I can look to enter the trade. So even though I missed that one, when I got stopped out, I would have looked to short here continuously. I believe I shorted actually a bit later. I'll have to check back at my executions, but both entries were good enough for me to look for shorts. So on this one, at that point in time, you do have SMT. So I'll just point it out by using this tool, right? You're looking at these swing points, and right here specifically, here I'll draw it on ES first actually, you formed SMT. Now, is it beautiful? No. Do you care? No, because it doesn't change a thing, right? Whether it's pretty or not, it doesn't change what it is, right? And you had beautiful SMT at this point in time. If we're using the correct candle, I believe it's the next candle over, but I always see it as part of the swing point. So you had SMT at this point in time, which means that I could have looked to short at this as well. Now, where would my stop be? Same rules as always, right? 3PD array. In this case, you have a fair value gap, you have an inversion fair value gap, and you have the order block. So my stop would actually be at this high. And this actually leads to quite similar risk to reward compared to the first entry. Let's just make sure this is still at the correct height. So you can see that you have very similar risk to reward at this point in time. So just because you missed the first entry does not mean that you're not going to have a good setup. Generally speaking, I don't like chasing after a trade. That's why I have a very specific rule for it. And as soon as that partial gets hit, I can't take a trade. So even going at it lower and seeing this right here. So just before we took out that partial, this is still a valid short in my book. This is no longer a unicorn, right? This fair value gap is still in close proximity to this breaker block, but this would still be a trade in some books. Now, personally for me, this would be a little far for my liking, and it would definitely not be a Rise model entry because that simply is not the model. But if you're not trading the Rise model, then I do think that the move is still valuable up to the point where that order block has been met. Definitely these two are where your prime entries will be. I like to talk about the implied dealing range. So let me just bring that on my chart. We're starting to have a lot of colors here. But the implied dealing range right here, let me just bring that over. And let's remove this, move this aside. Right here, what is that? That is my 0.5 level, right? That is my midpoint. Anything above this is a good entry. And if we draw it with precision, right? And we look at my objective. So I draw it from my objective to the high or low of my framework. Of course, if my objective is higher, it's going to be a low. But I'm drawing this from my framework. Best entries will be in the top 25%. Anywhere above the midline is where I can look to enter / scale into the position, right? So even if I entered here, I can scale in here if I want to. Now, personally, I don't recommend beginners look at scaling in of positions. They should just focus on scaling out, which is already a huge task. So I don't recommend this for beginners, but this rule is what basically made me scale in and out of positions. And I only do it on my live account now because I try and keep my prop firm challenges very strict due to all the rules and everything. I don't want to be denied a payout. And then after this midline, you're already looking to take profit. And see, our partial is right here in the first quarter. So this is where you'd be looking partial. And then if we go all the way down to data lows here and don't reach it, you'd be looking at partial here. And you'll see from my executions, that's exactly what I did. I partialed early here because we reached all the way down to the last quarter and did not expand directly to the target, which means that we're going to induce and retrace. We did. Still, the opportunity was there to continue. Right? See, if you entered right here, if you entered just a tad late, you would have gotten broken even. But anywhere you entered around that 0.5, you would have been very fine the whole time. I was going to say chilling. I was trying to find a better word for it, but there was not. So definitely some very nice shorts. There was a nice long opportunity, just not the best in my opinion. I did trade it. So in my journal today, there was actually, you should have not been looking for long. Just wait for your short to come. I was being eager, right? This is something that's very hard on my first trading day of the week, right? I want to get into the markets. I want to be trading. This is what I do with my life. So I want to be doing it, right? But having that sort of mentality will sometimes lead. It won't lead. It's not for everyone, right? All traders are different. But for me, it sometimes leads to me taking a bad trade. So my first trade of the week is usually not a very good trade, just in general. Now we can look at the PM session as well, which after that retracement, if we look at it on a 15-minute, right, looking for an intraday retracement here, you retrace to your first premium in efficiency. Right, so if we just pop that in, and I do understand there are a bunch of drawings, but we just look at that order block right here, see that we tagged it at this point in time. I'm actually just going to draw a line. This line is not going to stay, so I'm just going to have it done real quick just so we can see on our 1 minute chart. We go back here, you'll see we tagged this level, and then you would have looked too short. But as you can tell, this is just PM, basically price action. I always say this with the PM session. I'm either trading a lunch trade, which I would not have looked to trade because lunch is now expansion, or I'm trading 2 p.m. power 3. So you're waiting until 2 p.m. right here, and then everything is present for me to short. My retracement objective has been met. So I would have been looking to short at this breaker block once we formed it, right? Once again, swing high to swing low, formed a range, took out the high of that range, took out the low, and then you had your fair value gap, which is quite far. Oh no, actually you had an inversion fair value gap right here. So I would have looked to trade right here and see it. That would have clearly stopped me out at this point. And then the second entry was there, even a second entry. I'm looking for another breaker block to form. Well, yes, and it's pretty actually perfect. So we formed the breaker block right here, utilizing this entire range. I'll just use my standard deviations to highlight it. Quite a packed day, right? And then you would use your last down close candle, because we're looking at a bearish breaker block right here. Now, there is a lot of bullshit in between, but that doesn't matter, because from my mechanical rule set, I understand that all I need to do is take out the other side of that range. So I don't care what happens here. I just care that one side gets taken, then the other takes it. And I'm looking for SMT right now. There doesn't seem to be any except here. Yeah. So there is SMT at these highs. So that's actually all the confluence you need. M15, there was perhaps some M15 SMT. The way I use SMT, I don't care what time frame it comes from. It's just a rule from my model. So for me, I don't tend to look far into SMT because all I need there to be is that it's present somewhere. So if I don't see it right away on my 1 minute chart, then yes, I'm going to look at my 15, and on my layout, they're all in my face pretty much. So I'm going to look at my 15-minute SMT and 5-minute, and I'll look everywhere. But if it's right in front of my face, that's my checklist, right? It's checked. I have this part of my rule done, so I'm ready to trade. And if you see, we formed this breaker block. I like marking it out really mechanically to show you guys that if you just follow the rule set, you'll actually, well, see, today you would have traded better than me. That is the truth. I didn't trade to the best of my ability today, so there was that. But see how as soon as this is a breaker, what is the first thing I'm looking for? Fair value gap or inversion fair value gap to form. And we formed that right here. Just make that blue. And I include the volume imbalance. And the next candle over, we traded back into it. So you had no waiting, no bullshit. And you're looking for your 3 PD array stop loss rule. You have the fair value gap right here. Once again, I like to use the cross to look over to the left. I see that there is this inversion fair value gap. This has been invalidated, so I'm not going to use it. I have this inversion fair value gap next, and this fair value gap giving you a very tight stop here of 13.75 handles this PM. So this was actually a monster, right? Which is why I wanted to showcase it, definitely, right? To final objective, which was reached, is 13.45 handles, which is just current low of day, right? So I like to showcase it. I always say that I don't trade the PM. I trade the PM like once a month, randomly, when I didn't have a setup in the morning, or sometimes if I couldn't be there in the morning, right? And for 1 time a month, it's not enough variance to hinder with my model. So it's just fun for me to still be trading on a day where, for example, I couldn't trade. And just looking at the 5-minute chart here real quick, we are looking at the PM range. With such a big range, I'd like to jump up to 15 just to have a clearer inefficiency I could rely on, like this first discount inefficiency, this 15-minute order block. But if we go again purely mechanically, see, the only difference would be that you'd be a tad bit higher right here. So you know what? Let's be pessimistic. The rules say 5-minute range, first discount inefficiency. Let's use that 5-minute range, first discount inefficiency. But still, on a trade like this, that's what, like 5R? 6 point something R? I would have definitely taken partials beforehand. I know my people that trade the PM session definitely would have eaten today. That is wonderful. But as I said, I do want to be transparent here. I don't trade the PM at all, really. But you had a beautiful setup if you did. Do we have any questions? See, on days like this when there's just SMT on both sides and actually all we're doing is ranging until we break out one side and then it's all hell breaks loose, right? But truly, if it wasn't such a big range, you wouldn't mark this as anything other than just consolidation. I'm seeing a bug in the power of 3. That's the big one that shouldn't be there. That's the weekly. Why do I have my weekly candle here? That is so weird. Okay. But do we have any questions? I don't see anyone typing. I don't see any questions there. So was it pretty clear for you guys? How did you guys do today? Right? I'm asking. Because on days like these, when there's a lot of back and forth, usually it's not the best in terms of, right? You look at Twitter, you didn't see a bunch of people bang too much today. You saw a lot of nothing, pretty much. Same first trade as me, quit then, worked on my houses. Well, you know what? Perfect, right? If you're happy with just calling your loss, and you know what? Today it was a loss, tomorrow will be a win. Well, not necessarily tomorrow, right? But if you're just happy with accepting that, then that's perfect. That's fine. Sometimes, well, I'll never leave after just one trade. That just leaves too much opportunity on the table. But oftentimes, I'll leave when we have exactly that. And in the past, I've said this quite a bit. When I have one win and one loss, and then I'm break even, that third trade is usually very bad. And it's just with that specific logic of being one win, one loss, right? But today, I had one loss and one small win, which actually covered more than my loss. So because of that, I was already in profit. I was like, okay, let's give it a last shot, and worked out great. Saw the Bears breaker and jam. Congrats for hitting the home run. Thank you. And I played a win. I took a short and 2 longs, 37.50 on sim today. Wonderful. Wonderful. You know, a lot of people will tell you to talk about money, and of course you're going to be motivated by money. But truth is, all that matters is risk to reward. Right? If you tell me risk to reward, who cares how much you're risking? Right? Always try and think in terms of risk to reward. It is crazy how consistent it is. What are you seeing for the rest of the week? You know what? We've been here 32 minutes. I'll give a quick rundown. Truth is, I'm still looking for the same thing. Right? I'm looking for a continuation lower, taking out these levels, perhaps even going down to these levels. It's just that I don't anticipate that it will happen early in New York. It will all depend on London trading. I depend so much on what happens in London to establish how I trade. That's why I'm super excited to be bringing data on session profiling soon. But it's so many different things that go about that just happen in the overnight trading. So until 9:30. But pretty much if I see London expand higher, I'll be primed to short. I'll definitely look at that. If London expands lower, it's going to be a weird one. Probably going to be trading a long retracement during New York, but it's going to be a weird one. So I really hope that I wake up tomorrow and, well, actually, as I go to sleep, I see London going higher. That would be my goal. Does that make sense? Just a little rundown, right? But as I said, I depend so much on what happens during London. So that's why I don't really like speaking on what goes on tomorrow in these PA reviews, right? On that note, guys, we've been here for a while, right? We've been here for 33 minutes. Thank you all for being here. I appreciate it as always. I'm glad these are helpful. These are helping you guys out. If not, you wouldn't come back, right? So I'm definitely happy to see you all here. Very glad for it. You guys have a great day. Good luck trading tomorrow, and we'll be back. Wednesday and Thursday, we have 2 more PA reviews. So I'll see you all then. Have a great night, guys.